All right, guys, we are here today. It is Monday, March 10th. Market is down again. Nvidia down to 110s. We got Bitcoin all the way down to 82.
Monday, March.
Oh my goodness, that is way too loud. I'm sorry, guys. Whoa. What happened? I think I had to turn Carol up. Sheesh. I'm sorry, guys. That's way too loud. That just hurt my ears. I'm sorry. Let me know if that's better. I turned it down to like a more normal level. I'm sorry, guys. Here, this should be good now. We should be better. Let me know. Carol ran the stream last time I was here. I'm sorry. Are we good now? Is it better? How's the music? We should be good. I turned it back down to 0. We should be good. Is that better? How's the music right now? Let me check. Oh no. We should be good. Is that better? Yeah, that's better. Alright. Man. Is the music too loud? I can't really tell. Can y'all hear the music? Yeah. Alright, cool. Yeah, today is Monday, March 10th. We don't really have any economic data today, not really. Tomorrow's when the economic data starts. We got the JOLTS job report later on today, or later on this week. Yeah, we don't really have anything going on today. Consumer inflation expectations. Wait, at 11 a.m. we got consumer inflation expectations. That might move stuff. Last time it showed up at 3%. That does happen today. And then tomorrow we got JOLTS at 10. Wednesday we got CPI inflation data, which is the biggest day of the week by far. Thursday we got PPI inflation data, and then Friday I believe we have Michigan consumer sentiment and inflation expectations. Yeah, so busy week all the way around. Today is the slowest day. So yeah. Let me drink some coffee. Wake up a little bit. I played paintball yesterday. It was a lot of fun. It really was. It was a lot of fun. I brought everybody, including my son. And it was fun. My daughter came. Her boyfriend came. My son came. My wife came. It was a lot of fun. Everything is so expensive. Wait till after the month. Why is the market so red already? Any tariff news? Let's take a look. I haven't really looked this morning. BioNTech had earnings. Let me take a look. I haven't really looked. Yeah, let me look. All right, guys, so this is what I got so far today. As of today, stock markets are poised for a lower open, influenced by ongoing trade tensions and economic data releases. The S&P is down, Dow is down, NASDAQ is down. Investors are waiting the CPI inflation data for February, set to release on Wednesday this week. That's causing a lot of fear. I think political and news correlation, so trade tariffs. The president's recent implementation of tariffs on imports from Canada, Mexico, and China continues to heighten investor concerns about potential inflation and economic slowdown. These measures have contributed to increased market volatility. The president also acknowledged that his policies, including tariffs and government spending, might temporarily harm the economy, leading to increased recession fears among investors. Bond yields have declined amid economic uncertainty and trade policy developments. If we take a look at bond yields here, and again, this is kind of where interest rates are going. Here's a 30-minute chart. You kind of see we honestly started bouncing last week and stayed up some, but we were down a lot. We've been down a lot in bond yields over the past like 20 days. Here's a 20-day chart for bond yields. You can kind of see bond yields have been down a lot, which means in lower interest rate sentiment among investors and traders is what this means. You know, bond yields and interest rates follow each other. So if you want to see what interest rates are doing, what the sentiment around them is, you can always take a look at bond yields, because these are going to have a parallel movement with interest rates. And over the last 20 days, interest rate sentiment has gone down with bond yields. Bond yields did bounce back a little bit last week, though. We're up to 4.317%. Let me see this. They haven't opened today, though. Let me see what they're looking like today. So I'm showing today they're at 4.25%. So I'm showing they're dipping down a little bit this morning. So more pullbacks, which shows economic fears, is what this shows. It shows like weakness and economic fears. Yeah, my daughter's 15, so her little boyfriend came along. Bitcoin's down. Is it surging up this morning? The last time I looked at Bitcoin, it was down. Yeah, it's down to 82K. It's down. So it's down a lot over the last 24 hours, 48 hours of market activity. Or maybe not the 48 hours. It's open on the weekend, so let me see. It's down a lot over the last. So Bitcoin started dropping really on the 5th. So Bitcoin's been dropping for a week straight. It might have popped a little bit today, but it's still down a lot. Where's Tesla? Tesla's still down big at 250s. Very weak over the last couple months, or over the last couple weeks, I'll say. Let me pull up Discord. Bitcoin up 1,800 this morning. Yeah. What's up, Faye? Market going down can cause a recession. Well, and I mean, kind of. I mean, I wouldn't say the market going down can cause a recession. I wouldn't necessarily say that. You know, like an example of this is sometimes, like during the big AI run over the past few years, the market was running big and the economy was kind of weak. Oh yeah, daylight savings time. I forgot. A lot of you guys don't even realize it's daylight savings time right now. So anybody outside of the United States, you might not realize, but the time switched. You know, so like it is not. We lost an hour. So it is not 5:30 in the morning anymore. It is now 6:30 in the morning Central Time. It is now 7:30 market time. It is now 6:30 in the morning. Or it is now 7:30 in the morning instead of 6:30 in the morning. So I think a lot of the people overseas might still be sleeping. Every time daylight savings time happens here in the U.S., nobody understands it overseas, and they're all like, "Hey, what happened? Why are you starting an hour late or an hour early?" In this case, I'm not. This is the actual time now. It's 7:30 market time right now. We lost an hour for daylight savings time. Yes, correct, Jay. It is now normal time. Which honestly, I'm for. It's been getting dark here at like 5 or 6 o'clock lately, and so like, I haven't really liked that. But yeah, I'm all for more sunlight. I really am. Yeah, I mean, I see Bitcoin, guys. So I see people talking about Bitcoin, and I hope it is. But like, y'all are at the same time, though. Let's just be honest here for a second. Y'all are talking about this, you know, and so I'm optimistic as well here. But like, I gotta reel it down a little bit here. Like, look, y'all are talking about this right here. So this drop has happened, and now we bounce back this amount. I'm not really like throwing balloons in the air right now necessarily for Bitcoin. I just don't know if it's time for that. But hey, live your life. Listen, I hope it comes back. I really do. I'm not gonna hold my breath for it at this point in time. I think it will come back eventually, just to clarify, but who knows where it'll drop until then. Does recession fears help with inflation? Kind of. I would say us entering a recession with that much reduced spending helps with inflation. But I don't know if the fears of a recession necessarily help with inflation, just for the context of it. I think like what helps with what helps with inflation is reduced spending, which sometime correlates with a recession. I wouldn't necessarily say the fears of a recession helps inflation, because what helps inflation is reduced spending. Yeah, I hope the market goes up. I really do. I'm an optimist in the market. I think long term the market's going to go up regardless of any of it. Short term is where you don't freaking know what happens, but long term it's pretty consistent. All right, guys, but yeah, so bond yields have declined. S&P changes. We had DoorDash, TKO Group, Williams Sonoma, Expand Energy set to join the S&P index as part of the quarterly rebalance. These companies will replace Borge, Warner, Teleflex, Celanese, and FMC. And so again, DoorDash getting added to the S&P 500 index, TKO Group getting added to the S&P 500 index, Williams Sonoma getting added to the S&P 500 index, Expand Energy said to get added to the S&P 500 index. I don't know any of the companies they're booting out, which I'm okay with them booting out these companies if I don't know them. I know DoorDash, I know Williams Sonoma, I know TKO Group, I don't know Expand Energy, but I do know the first three. So I'd rather have companies in the S&P index that I actually know and understand versus companies that I don't know and understand. So yeah, they can boot out Borge, Warner, Teleflex, Celanese Company, and FMC. I'm okay with it. Get them out of here. We got a fake pawn. Ban. I banned the fake pawn just now. But we will never message you asking you to click on a link. Rise and shine, guys. SoFi, let's see. 12:30 right now. Yeah, SoFi is interesting. I think companies like this are the future. But they're down a lot too with the big correction that the market's just in a big brutal correction here. But yeah, it was funny. Like, my son was playing paintball with us, and my son's 11, but he's a little bit smaller for his age. I was very short when I was his age. I didn't hit my growth spurt until I was in like 8th grade, 7th grade. And then I grew to where I am now. But I was like really short most of my kid life. That's why when people tell me, they're like, hey, you can look at how tall somebody is at a certain age and see how tall they're going to be when they get older. And I don't know if that's necessarily true, because everybody thought I was going to be really short when I was in like 5th grade. I was like the tiniest kid ever. And now I'm not really necessarily tall, but I'm not short. And so, top 3 not shortest people in the world right now. But yeah, anyways, ADHD side quest rant. But we took my son to play paintball. He's 11 years old. And we were worried how he would handle it. We got him a chest vest and everything. But my daughter ran up on him and caught him right in the kneecap. And he retaliated. He got mad. My son is the type where he doesn't cry. He gets mad, bro. Like, my daughter hit him, and he went on, like, a retaliatory paintball spree where he just started shooting everybody, and everybody's like, whoa, watch out. And that was the only time he got hit the whole time. The rest of the time, he did great, The rest of the time, he got me a bunch of times, too. So he got hit once, got mad about it, and then didn't get hit at all the rest of the time. Was very strategic the whole, like, we played, like, 6 other games. It was fun. It was a lot of fun. AMD would be prettier if Intel wasn't just as pretty, started to look ugly. Well, I don't know if Intel's just as pretty. It's definitely a little bit more sketchy, I would say, for Intel. The only thing pretty about Intel is the price potentially here. And again, I think I don't know. AMD's definitely the cool kid on the block in terms of microchip companies versus Intel. Intel's definitely not the cool kid on the block when it comes to, chips. But they're both big companies that are widely used in technology. So, I mean, I like both of them. I think AMD's more extended in price, and so it's less attractive in price alone. But I do like AMD chips and processors are a little bit better. So, I'm a little bit mixed here, I think Intel stock is definitely cheaper than AMD is, but AMD's now under $100, and so there's an argument there. I'm not an investment professional. With all that said, though, guys, here I am not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade responsibly, guys. I can't guarantee anything. I have no freaking idea what I'm talking about. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Do not copy me. I have no freaking idea what I'm talking about. But yeah, Intel's cheaper. Yeah, I was into paintball a lot when I was younger. Like, I had one of the spiders. It had like automatic settings and like semi-automatic settings and triple 3-shot burst settings and like all these cool stuff. It was like tie-dye colored. I had like the big CO2. I had like all the gear. I remember I talked my cousin into playing paintball with me, and he had like one of these little pump. Was it a Talon? Like a little pump Talon paintball. I had an automatic spider, and he just got, never played with me again, to be honest. I used to play airsoft a lot more. Than that. Oh, yeah, Titman 98 Custom, the OG. It really was the OG. I actually asked him about the Titman 98 Custom yesterday when we went. And I was like, hey, do y'all still use Titman 98 Customs? And he was like, no. He was like 10 years ago, that was like the go-to. But nowadays, they use something else. Like, they had something completely different. But I remember the Titman 98 Custom. Those things were fun. Everybody had the Titman 98. And if you ever rented one at a paintball place, it was almost certainly a Titman 98. But yeah. Nvidia and Palantir sell. Is Palantir still selling off? It really is. It's at 81.80. So we're going to trade again. We did pretty good last week, to be honest, man. Like, trading-wise, we did pretty good. Like, let me show you guys. Like, last week, we did, dare I say, great for my, like, in terms of, like, how much I'm making. I did great last week, dude. Like, check this out. Let me see if I can find it. Yeah. Look at this. Let me show you guys this. Hold on. Check this out. Yeah. This was my week last week, guys. I mean, I know it wasn't much, but it's pretty good for me. Look, it's pretty good for me. Look, like this was my week last week. We made $1,000 one day, 24 the next, $257 on Friday. We ended up getting very green on Friday. So we went on Topstep TV, and then we lost a little bit, and then we ended up taking like another trade that I liked. I thought the red action was so obvious that I thought we had like a big edge around specific levels. So I ended up just taking some. So last week we ended up netting about almost $1,500 on our actual funded account here. So we're doing pretty good. About $1,500. So not too bad. Yeah, Palantir, I mean, look, man. Good, probably a good long-term company. Short-term, that thing was hyper-extended. You know, when anything has hundreds of PE ratio, it's probably a little extended on the upside, no? No, this was outside. AMD is going to be fine long-term. Lisa Su knows what she's doing, and they have lots of incoming down the pipeline. Yeah, no, I agree. AMD's going to be fine long-term. It's definitely got a brighter potential than Intel. I think they're evolving more than Intel is, but I might be wrong. Who knows? Again, I might be wrong. Netflix all the way down at 870s. Is there an argument for a dip buy here at Netflix? And I think if there's any company I'm going to like potentially buy the dip in, it's going to be Netflix. Netflix I like a lot because Netflix is about to get into live sports. Like more deeply, at least. They already kind of are into live sports. They're going to get deeper into live sports. They have the infrastructure, everything to do that really, really well. And if there's a company I'm going to start buying into right now, it's Netflix, to be honest. I think they're going to split sometime this year, make it more affordable. I think they're like, that's the company where I'm really looking at right now. If we look at Netflix over like a long term, it has corrected a lot. Yeah. This thing's corrected a lot, and I think this is one of those companies where I'm really genuinely starting to think about buying into it currently. But what do you guys think? It's expensive. I want to buy it. Yeah. All right, guys. Man, what do the people show me on social media? All right, guys. Yeah, Netflix is down a lot. I'm watching the nasdaq though. Here's the NQ. Bitcoin back up a little bit. It's not bad. NASDAQ is under 20K, and I like the 20K level because I think 20K is just a massive psychological level here. Yeah, so again, this week we got CPI inflation data. Next week, we got the FOMC meeting, which is crazy. Dell up a lot over the past 5 years. Yeah. All right, and again, let me know if the volume is good. I don't want it to be too loud. I probably should still turn it down somewhat here. I know I'm loud enough, but like I'm going to put it back to 0, back to even, and then there we go. That's probably better. Broadcom down, SPY down, Tesla down, Microsoft down. I'm trying to see what other stuff we got going on in news. All right, so the Russian president and the U.S. president have expressed political will to work towards improving ties, according to the Russia's Kremlin. All right, so key Japanese government panel members called for vigilance to risks of rising inflation hurting the economy. All right, guys. So I don't really see any other big news today. Again, the big question this week is, what does inflation show up as? Inflation expected on Wednesday at CPI inflation data expected at 2.9% for the median forecast for regular inflation. Last time it showed up at 3%. So we are expecting under 3% for inflation. The month-over-month inflation gauge for February is expected at 0.3%. Last time it showed up at 0.5%. Core CPI expected at 0.3% as well. Core CPI year over year expected at 3% also. So, yeah, that's what's going on right now. A lot of like dialogue news over what's going on overseas. I sold all my Palantir. SPY going anywhere. Everyone knows Palantir is overhyped. Perhaps this would be a steady sell-off. Yeah, I mean, I remember you said back then you didn't want it. Yeah, you're probably talking about Palantir. Why do you want to buy Netflix now when you didn't want it back in 2022 when it was $178? What? Yeah, I feel like you might be making up stuff now, brother. In 2022, $178. Again, I like Netflix right now, regardless of what it was back then. I think Netflix is just different. Honestly, though, thinking about it, I've been pretty bullish on Netflix for the last like few years, and my argument for Netflix has always kind of been the same, which is that Netflix is producing its own in-house content now, right? Like, this was my argument for the last 4 years. Netflix producing its own in-house content, that makes it seem pretty attractive because some of the movies they're putting out, like The Adam Project was good. A lot of the other movies that they've been producing have been pretty good over the last few years. And so I think I've been pretty bullish on Netflix, to be honest. But, you know. You're loud? Am I loud? I can turn it down if I need to. Buying the dip today? I don't know if I'm buying the dip right now. I think one company that I'm bullish on is Netflix long term. Short term, anything could freaking happen. And when I say long term, I mean like 10 years. I think Netflix is going to get into live sports, and I think regardless of, I don't think I ever was bearish on Netflix at $100 and whatever dollars. That's like its low of the past 5 years, and so I don't know. I don't think I was bearish there, but even if I was, I like Netflix now because live sports. And Netflix is going to get into the live sports game. They're already the biggest streaming platform in the world, and so if they get into live sports, I think they're good. But yeah, live sports. That's the big thing. Yeah, live sports is a huge aspect of Netflix that's going to make like a big wave. I think you can see that they're testing it with the Tyson Paul fight. And even though that glitched out a little bit, it was a test run, and they're going to update their servers. They're going to build that back in, and they're going to keep pumping that away with live sports, and that's going to grow them exponentially, I think. I might be wrong, though. Don't copy me. Not an investment professional. What do you think about yield max funds? I think some of those high yielding ETFs are risky. And the reason they're risky is because it's a game you're playing, right? And again, I always describe it as the same thing, which is like picking up pennies in front of a train track. But I think that analogy is a good analogy. And the reason I don't like them is because they're like this. Usually the yield max ETFs are falling drastically, right? Now, they might pay you a yield that earns you like this, but it's a risky thing because if it dips more than it pays out in yield, you're down a lot, and it's just a sketchy game that you play with those things. Anything that pays you out more than 10% a year is going to be a really, really sketchy trading vehicle, I would say. Most of the time the game is, can you earn more yield than the price? It's wildly depreciating. And sometimes it's not, but it's just a risky game. I'm just not interested in it. Recession this year? I don't know. For me to pivot and think we're heading towards a recession, I need to see some more weak economic data. Like, we've had a little string of somewhat weak economic data. We had lower than expected. What was last week? We had worse than expected services. We had worse than expected payrolls. We had higher than expected unemployment. They expected 4%. They ended up showing 4.1%. Payrolls were low. Unemployment spiked a little bit. And so those are some bad economic reports, right? They're not terrible. They're not like the end of the world bad. They're just they're mostly flat, but a little bit worse than expected. In order for me to think we're heading towards a recession, the big one I need to see is GDP going down, right? Like, if you think we're heading towards a recession, you have to see GDP go down, because that is the technical definition of a recession, is losing GDP, negative GDP. And so us with GDP at 2.3%, that's pretty far away from negative. We still got time. Like, again, maybe we're headed that way, and I'm going to watch some economic reports. I'm going to see what inflation says and all that stuff. But for now, we're definitely not in a recession. We're not really looking like we're heading towards a recession. We do have some weaker economic data, and maybe that means we are trending that way. But we need much more confirmation than we have right now, I guess is the point. Yeah, I'm looking at other stuff. Bro, the stuff you see on social media, man. All right, guys. So gold. Where's gold at? Gold at 2,900. Still down a little bit, but still right around highs. It's not right. It's not. It's still got time. All right, guys, so gold popping back up a little bit after dipping down to 2,900. The SPY's testing lows right now, chat. So let me put this up here. Look at the NASDAQ. The NASDAQ just cracked lows. It's at 19,920s. 19,920s. It's still breaking down some. Still breaking down. Ooh, it's Monday, guys. It's Monday. How you guys doing? Morning, John in chat. What's up, Jonathan? Danny plays. Atlanta Fed doesn't count all the gold imports towards GDP, but is counted in net imports and subtracted from GDP. A weird thing happening with gold. Yeah, that makes sense. Hey, what's up, Pedro? I'm not sure if government spending is that good for the upcoming GDP report. Otherwise, Lutnick wouldn't be removed from the GDP calculation. Yeah, I've heard that a couple times, to be honest. Arizona report had some mistakes in it. We really have only had uncertainty from tariffs, and I think market is starting to ignore it, honestly. Hey, John, think we're in for further pullback this year, ready to bounce back? I really don't know right here. I know what I do know is that if we start to pull back more, I might start to DCA, but I gotta like hand select whatever I choose to buy. Like I'm not optimistic in everything. I think there's risks, and I think I have to basically be really selective because I think we certainly could keep dropping right now. Like I don't see anything to stop these pullbacks. I think long term there might be value here, but short term it's hella risky. I'm just not interested in. We might see an emergency rate cut soon. Nah, bro. What makes you think we're gonna get an emergency cut? I don't think we see any data that shows an emergency cut's likely at all. Unemployment's at 4.1%, regardless of higher, lower, expected, whatever. Unemployment's at 4.1%. GDP is at 2.3%, 2.4%. Inflation is, somewhat high, elevated at 3%, 2.9%, 3%. I just don't think the Fed is going to play with fire by cutting rates emergency wise. I just don't think it's going to happen. And I think you got to understand, like, there's a lot of lenders that desperately want rate cuts. So there's a lot of lenders that like desperately want rate cuts because their business struggles without them, right? And so they're going to push, we're going to cut rates. We're going to cut rates. Highly unlikely we cut rates right now. Even if we look at the CME watch tool, and I do think the sentiment on rate cuts, I think we are seeing a little bit more dovish economic reports, meaning like economic weakness. But when we look at the rates actually got worse. The likelihood of a cut got worse. We're at 3% now, 97 to 3% likely that we're going to pause versus cut. So it's a 97% likelihood that we're going to pause rates right now, a 3% likelihood that we're going to cut. Look, because again, like you got to think about it like this. Why would the Fed do an emergency rate cut when we have a rate decision coming out next week, right? Like they would just wait until next week and cut rates then. They wouldn't like do an emergency cut. It like, it's just nonsensical. It doesn't make any sense. Yeah, payrolls were like 150, they were worse than expected, but they weren't like horrible. They weren't like under 100 or anything. So yeah, unemployment needs to spike, GDP needs to dip, payrolls need to be weak, inflation needs to be under control before we emergency cut, and we're not in any of those conditions, just none of them, Yeah, I mean, Kevin, sometimes I feel like you're just saying random things that I'll disagree with, which I think is what you're saying. CPI is going to force an emergency rate cut is silly. Number one, that stems from a lack of understanding about economics, because what is CPI going to do that forces a rate cut? If CPI comes in high, it means less likely that we're going to cut rates, not more likely. Right, like the Fed, in order to cut rates, the Fed needs inflation under control. And so if inflation comes in really hot, it's actually an argument against rate cuts, not for it. You know what I mean? Yeah, rate cuts and tariffs are going to drive inflation higher, 100%. Yeah. You got to think, rate cuts happen whenever inflation is under control and the economy is weak, right? If the economy is weak and inflation is under control, rate cuts are generally on the table, because the ideal environment would be low interest rates, right? Like, they don't want to keep interest rates high, and like everybody's happier with lower rates for the most part, aside from the inflation impacts. They need to have justification for it, and by justification I mean they need to have low inflation and economic weakness that justifies rate cuts. If we don't have those two things, they're certainly not gonna do an emergency cut. Hey, what's up, Mitch? How you doing, brother? Redfin. So I don't really watch this super closely, but does Redfin give a look at the real estate market, Mitch? Like, can you look at Redfin to gauge strength or weakness in real estate? I'm being honest, I really don't know. I don't ever really watch Redfin or know much about it. But it's up a huge amount. It's up to 11s. Yeah, people have these buzzwords that they hear from other people, like regarding all this different stuff. But a lot of times they don't quite understand it. And so, they might think that high inflation means we need rate cuts. It's actually the opposite. Like, high inflation means we shouldn't cut rates, because lowering interest rates is going to do what? It's going to make people spend more. By spending more, what's the consequence of more spending? Higher inflation. And so high inflation, like, if we get high inflation and then cut rates, it's going to make inflation higher, not lower. And so people have to really understand, like, the different correlations behind this stuff. Again, lower interest rates typically means more spending, which equals more inflation potentially. And the only way the Fed's going to be willing to cut rates is if the economy is weak and inflation's under control. We need the ideal conditions to justify it. And if we don't have those two things, at least like reasonable inflation. Like, inflation has to be reasonable. It can't be spiking, surging, panicking. Did he really? Let me look this up. Yeah, Powell's gonna be chairman for at least another year, until May of 2026. Yeah, but so Susan says the president campaigned on lowering interest rates. They're going to cut them 3 times this year. I'm guessing maybe a bigger than expected cut. I mean, that's possible. You do have to understand, though, like, and again, I'm going to preface it with that. That's possible. Like, it could happen. But you do have to understand what they advertise themselves as versus what they actually do varies a lot, right? Not with both sides. This is not just one side of the political spectrum. This is both sides. No matter what happens, a lot of the time, I wouldn't necessarily wait for that. It depends on whether we have the ideal economic conditions. And I know the president also said, like, we need to bring interest rates down. And I get it, but it's not that easy, right? Like, if on one end he's saying, hey, inflation's high, we need to beat it. On the other end, he's saying we need to bring interest rates down. Those are contradictory things. Bringing interest rates down might make inflation worse, and inflation needs to be under control before we cut rates. We can't just, if inflation wasn't a factor, we would bring interest rates down and influence spending, because lower interest rates is better for most people, right? Unfortunately, it's not that easy, and we can't just bring interest rates down like in a heavy amount to help people, because the consequence is going to be inflation if we do it in a irresponsible way, I guess is the best word for it. But maybe we do. I don't know if we're going to get 3 cuts this year. Let me see what the expectations are currently like. Like, if you ever want to track what interest rates might potentially do, like what the rates are going to be, go to the CME Watch tool. Now, this tool does absolutely change over time, but one of the things you can look at is you can look at the future. So right now, next meeting next week, very unlikely that we're going to cut rates. A pause is 97% likely. If we look in May, a pause is still unlikely in May. If we look in June, June's the first time we pivot to where we have a greater than 50% chance of a cut. So it looks like most people think in June we're going to cut rates 25 basis points. All right, so that's one cut, and it's a small cut. And that would bring us down to 4 to 4.25%. They also think that we're going to cut at least another 25 basis points by July. So they're thinking June, July, 25 basis point cuts each meeting. And then September, we're still staying at that level. They still think we're going to do 25 basis point, or about 0.5%. And then this actually decreases a little bit more, I think, right? Yeah. 375 to 4. Okay. October. Yeah, so they're thinking 3 cuts of 25 basis points by October. And then if we look at December, yeah, so you're actually correct, Susan, in terms of the rate cut expectations for this year right now, at least. And look at the market fall. So Nvidia falling, the NASDAQ breaking lows. I'm going to put gold up here. But right now, it looks like, according to most analysts, they think that we are going to cut rates. I don't know how many times we're going to cut, but they look like we're going to cut about 75 basis points, which is 0.75%. Is what they think we're going to cut this year. Now, this is always subject to change. And again, it's subject to change because we might get better economic data, worse economic data, better inflation data, worse inflation data. And so if inflation data comes out under control, like if we get lower inflation than expected, as well as economic weakness, the likelihood of deeper rate cuts would increase, right? We have to have lower inflation and weaker economy data. But if that's the case, the likelihood of rate cuts might increase. If we get higher inflation, worse inflation problems, better economic data, but worse inflation problems, these rate forecasts might change, and we might get less cuts than expected. We might only cut 25 basis points or 50 basis points. And so it's always subject to change. Powell might say whatever he wants to say. Like, Powell might say something 3 months ago, 4 months ago. You don't want to hold too much weight on what he says, because every meeting he's going to look at the data and he's going to make a different decision sometimes based off of what he said 3 months ago. 3 months ago, he might have said, yeah, we're going to do 2 cuts. 3 months later, when he gets weaker economic data, better inflation data, he might says, hey, we're going to do 4 cuts this year. And so I see a lot of people that take what he said 6 months ago and they use that to forecast what we might do now. It's wildly different. We have much different economic data to change the rate expectations. So you don't want to hold too much on what he says a long time ago. You just want to follow the most recent meeting, see what his updates are, and follow along with the economic data. That's the easiest way. You can also watch bond yields, right? Like TNX. Bond yields, again, correlate with interest rates. So if bond yields are decreasing like they have been over the past 20 days, this is a lower interest rate sentiment. And that makes sense because at this point, we thought we were going to start cutting rates in July. Now it's looking like what? When did I say we were going to start? Now it's looking like June. Yeah, June. Yeah, so now it's looking like June. So I never saw what Mitch said about Redfin. It was up 66% before Bloomberg headline. Off that Redfin news. Hey, nice. See Bitcoin chart. Is Bitcoin ribbon? Let me take a look. I mean, it's up some today. You know. It's probably just an extension bounce back. Just to put this into perspective, though, Bitcoin's still very red. Like here's where it closed previously, way up here. It's way down here. So it's still actually really red on the day. It might be rebounding back some, but I don't necessarily think, like, yeah, like look, Bitcoin is gapping down. Like look, Bitcoin dropped all the way down here. And now it's kind of slowly bouncing back a little bit, but I wouldn't necessarily call that strength. I think that's just kind of a dead cat bounce type of thing. I'm still seeing tech dip here. Do you have a general rule on DCAing for downturns or specifically for this downturn? I usually wait. Again, I don't want people to hear me say I'm going to maybe start DCAing into stuff now and copy me and the market keeps dropping. And so you have to understand, if I start DCAing right now, it's only because I'm holding it for the next decade, you know, and maybe I don't know what I'm going to do with it, but be careful because we are in the midst of big economic changes, catalysts, deep weakness in markets. I would just be careful, right? Like usually I wait for confirmation. So I want to see a little confirmation first. SPY still cracking lows. NASDAQ still breaking down. Tech still very weak. And just the key with DCAing is small size, right? Like you could add 5 shares, you know, a month and still DCA really effectively sometimes. So I would just be very careful. I wouldn't get too greedy, I guess is the point. I'm going to wait for confirmation before I start adding to positions just to put it into perspective. I still see too much weakness. And we got like inflation data coming out on Wednesday. If that comes in hot, market might panic and that, you know, stuff might go down quicker. Yeah, I'm looking at bond yields. Bond yields at 4.24%, showing more economic weakness potential here. Yeah, it said Fed Chairman Powell has not stated any intention to resign. He explicitly affirmed his commitment to serving his full term ending in May 2026. So I haven't seen anything about him resigning. Let me do a poll here, guys. I just realized I didn't do a poll today. Does the market bounce back over the next 2 weeks? Yes or no? Vote on the poll. Poll is live. Again, I see a lot of tech still breaking down. Microsoft down to 387s. Tesla down to 250s. Netflix down to 880s. SPY down. Broadcom down. Meta down to 600s. Yeah, Bitcoin's down a lot. It's definitely weaker for sure. All right, guys. So a lot of tech still breaking down here. Nvidia is very flat too. Nasdaq's breaking down under 20K. Do we get choppiness today? I think it's possible. With inflation data coming out later, JOLTS report, jobs coming out tomorrow. I think it's very possible we get choppiness today, leading into the big economic reports of this week. Tomorrow we got the JOLTS report, which is a pretty big report. Hey, my guy, thank you for the donation. Any thoughts on market reaction to future debt ceiling meeting? Is that something you cover? I don't usually cover it like live streaming it, but we do watch it. And the market probably will react somewhat to it. We'll have to wait and see. But the market will react at least a little bit to it. So. And again, we got the SPY breaking down. A lot of tech falling still this morning. So we're still looking kind of weak. And I think we're in a period of like volatility. If you look at the VIX, I'm sure the VIX is up big. Yeah, VIX is up to 26. Yeah, so if talks on the debt ceiling stall, the S&P, the Dow, the NASDAQ might negatively react. If a deal is reached, it might make stocks rally to a certain extent regarding the debt ceiling, meaning uncertainty can cause sell-offs. Treasury yields spike as investors demand higher returns to hold government debt if default risks rise. U.S. dollar weakness may occur if a default seems likely, you know. So market will react to it for sure. I vaguely remember the last time it made the market react. Hey, thank you, Sam. What's up, brother? So Kevin, so his last term, he absolutely did a similar thing to this. I remember streaming during his last term. He absolutely battled, and there was absolutely a trade war going on in his last term. Same exact thing. It was very, very similar to this. You know, he would battle. It was more with China the last time. Is the one I remember the most. Like, he was going back and forth. We had market volatility during his last term, absolutely from trade tensions. So yeah. Yes. So Sam. So we had what's called daylight savings time here in the U.S. So we had what's called daylight savings time. So we lost an hour of sleep basically. So prior to daylight savings time, it would have been 7:17 market time right now. Now it is 8:17 market time. So we lost an hour. And so if you're overseas, time lost an hour. It jumped forward an hour basically. All right, so we're going to get ready to maybe trade some here. We still got some time. Again, we ended up making almost $1,500 last week. Almost $1,500. We made like just under $1,400 if you want to take a look at this. Check it out. So we made $1,355 out of 68 trades last week. I will take it. I will take it. We're going to try to trade today a little bit here. Let's see what it looks like. We got our levels here. We're going to get ready. Look at this flush down here. We're going to have to start building some levels too. I like this 20K level though. I really do. I think 20K makes sense. And we're still dipping underneath it. Yeah, the market opens up in, yeah. Market opens up in an hour and 11 minutes. Hour and 10 minutes. Yeah, I don't know whether Nvidia is good to add to anything. I'm not an investment professional, not liable. If you lose, always make your own assessment. Trade responsibly, guys. I have no freaking idea what I'm talking about. We did make a lot on Friday, though. We ended up making about, I think, $250 net, something like that. Market's still correcting pretty big. This is on Topstep X franchise, so it's just on the platform I'm using. Yeah, so I am on Topstep X, which is Topstep is a funded account program. They give you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. So I have like 3 or 4 funded accounts on there. It's really useful for traders that want to get started, but maybe either they don't have skill, they're new, they want to learn, they don't want to lose too much money in the beginning. Because most day traders lose. If you put up 5, 10, 20, 30 grand, you're probably going to lose a lot of that day trading in the beginning. Most day traders lose. And the ones that do make money, it takes years for them to be successful. And that's why something like this is valuable. So again, they give you a 50K demo. If you can make 3K in profit on a 50K demo without losing $2,000 first, following their rules and conditions, they fund you 50K with a 90% split, and they pay out millions. They fund thousands. A great way to learn how to day trade. Because again, most day traders lose. And so in something like this, like if you failed, the base one's $49. If you paid for a demo account with real-time data, it might cost the same amount. Like very similar in value, I would say, is much higher with something like this. Because again, not only do you have like a demo account, you get real-time data if you fail it. You get to use a practice account with real-time data if you fail it. If you pass it, you get a 50K funded account, 90% split, and it's a 3-to-2 ratio. So reasonable ratio. It teaches you how to follow rules. It teaches you how to trade under pressure, and it's just a great way to learn. And most day traders lose regardless of where they go, including here. But usually it's a lot cheaper to lose here than it is to risk tens of thousands of dollars and probably lose it. I know I lost thousands in my first couple weeks, and so limiting my risk in the beginning to $50, and if I pass it, you know, and get my funded account and all that good stuff, if I'm good enough, I can withdraw. But if I fail, I only lose a very small amount. So it's much more reasonable of a place to learn. But again, I'm biased because I get paid by them. But if you want to check it out, I'll put the link up in chat. Remember, understand all these rules. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. There's the link right there in chat. I'll put the link up right now in chat. Check it out. Great way to help support your boy here in the channel. Again, you want to confirm it all with them. I can't guarantee anything. Top 3 worst trader ever. So we are holding right here at 19.9K. Nvidia didn't have bad earnings. Their earnings were just underwhelming versus what the public wanted, right? Like, so Nvidia actually beat EPS, beat revenue, good guidance, but the public wanted more, and so they wanted better numbers. Do you think we may have bottomed already? I really don't know, and I really don't know. What I will say is that we have a lot of economic data coming out in the next 2 weeks. We have CPI inflation data coming out this week in 2 days. That can wildly influence markets. We got CPI inflation data dropping soon. We got the Fed meeting next week, right? Those 2 things can either pour gas on the already fire market, or they can save the market if we get something optimistic come out. And so I don't know. I don't know whether we're going to bounce back. I don't know whether we found a bottom. I'm going to wait until we get those economic reports out first, personally. Because tomorrow we have the JOLTS report, jobs. Wednesday we got CPI inflation. And I think that's going to be a big tell on what the market does. Whether the market keeps falling, whether we bounce back, what that looks like. That's kind of what I'm waiting for is what the market does there. Yeah, we got JOLTS jobs tomorrow. We got a lot of tech falling down too. Airbnb stock could rise nearly 40%. Analyst says what's driving the optimism. Airbnb stock is a winner amidst durable growth. Innovation plans, Jeffrey argued Monday. Analysts upgraded shares of the short-term rental company to buy from hold. Increased price target to 185. Yeah. Airbnb is interesting. It's down a lot too. It kind of shows you the state of real estate, right? So if we put Airbnb up, here's a daily chart for Airbnb. So it is down this year. It's down from 170s to 130s, which is actually a pretty big percentage drop. Quantum stocks. Quantum's probably the future. It's a little ways out though. Tap or nap? Always tap, you know. The only people that don't tap, like we had a purple belt that I was rolling with one time. little bit smaller than me. Kind of like an older guy. And I swear, dude, every time I would roll with this guy, he refused to tap. This was when I was a white belt, right? And I was okay as a white belt. I wasn't the greatest white belt ever, definitely top 3. But every time I'd roll with this guy, he never tapped, right? I got him in a bow and arrow choke one time, and this man, I had to like grab his legs and kind of snap him up and wake him up, and he started like making like it was, he ended up waking up, but like the only people that don't tap are like people who really get their pride in the way. You always tap. I tap all the time. Well, he went to sleep and woke up about 2 minutes later. He woke up about 30 seconds later, but he was kind of out of it. You always tap. Yeah, pride will get you every time, 100%. And bow and arrow chokes, those are chokes where you better tap. You don't tap to a bow and arrow choke, Anyways, the VIX, guys, let's take a look at the VIX. Here's the VIX. You can see the volatility. So the VIX goes up as volatility and weakness increase, right? So here's the VIX on the top right. The VIX goes up as volatility and weakness increases. So we got volatility and weakness definitely increasing basically since February 10th or so. And the VIX is popping. The VIX is almost to 28s. So the VIX has been increasing. We'll see what happens now. The VIX is up today, I'm sure, because weakness is in markets. So forgive me, guys. I'm kind of rocking out to this music. Hold on. How do I cancel this? All right, guys, so VIX is still pumping up. NASDAQ's testing lows again here, guys. Look at this. We're testing lows. We bounced off of my little level here. We're still cracking down here. Looking weak. I didn't get one radical, but I avoid any type of controversial statements regardless. Like, yeah, I'm not talking about any of that stuff. I avoid all that talk. Like, I keep myself very neutral because I really don't care about any. What in the world? Whatever. All right, guys. Yeah, so look, we just cracked lows again, or at least we're right at lows. I'm sure we're going to at least break it right here. So we're right here at lows. All right, so yeah, we just cracked lows again. There it is. We're at 881s now on the NASDAQ, 882s. Yeah, a lot of selling pressure. Looks sketchy. All right, we're at 567s, 568s. VIX is up. AVGO at 189s. All right, so there's 8:30 market time. 8:30. Let's see if any big news comes out. We try to track everything. All right, so the economic advisor says that there are many reasons to be bullish about the U.S. economy despite some blips. So that's good. MicroStrategy files to sell up to $21 billion of 8% Series A perpetual strike preferred stock, according to an SEC filing. Yeah, VIX is up big. Market's down big today. Crack lows, still coming down some. What's your DCA strategy in a scenario like this? It depends. I mean, I don't know. Honestly, if I'm going to start buying, I need bigger drops most of the time. I might hand select a couple stocks that I think are down big that might be up long term, but I need more drops. And then once I do start to add to it, I usually take very small size. Like an example would be I could start to DCA into Netflix. I can buy, what's Netflix? Since Netflix is so expensive, I can buy like 5 shares a month in Netflix for the next few months, and that might seem like a nothing trade, and you might be right, but you got to remember Netflix shares are almost $1,000, so that's adding about $5K a month to Netflix, and I'll do that for however long I want to do it. We use something like Apple or something like that. Apple, like I buy, 20 shares of Apple a month, something like that. It just varies. It varies. All right, guys, so we are flushing down a little bit. We're at 19,873s, breaking lows again here. NASDAQ is down. Nvidia still testing these lows. The VIX is pushing up, of course, and we still got a lot of weakness. Look at this brutal red action still coming through. Man. All right, so AVGO Broadcom broke lows again, too. All right, guys, so we're still tapping lows. I don't know what I want to do here. I could take a small little dip buy. You know what? I might. I know this is a risky trade, and it's early in the day. I'm already up so much. Small little baby dip. We'll see if we can ride it back to like 9s is what I want. I might add a little bit more to this too, but it's early in pre-market. Here we go. I'm going to add some here. Don't do it. All right, we got 2 contracts here. I'm probably going to have to sell some soon. But I do want to give it time to bounce back. I really do. I think we could. All right, we're down a little bit. I'm going to cut this. It's just too risky. Yeah, we're out. So we lost like 40 bucks. We'll give it another chance. I might keep trying to buy this bottom, especially if we get like a retracement. I'll try this here. And we're going to have to add some to it. It's a risky position, but like we're up a couple thousand in this account. And so on the cut last few weeks at least. All right, we'll add some more. We'll take 4 contracts here, tops. We got to be really careful though. We're catching a falling knife here, but I think there's some edge, so we'll see if we get it. There we go. There we go. All right, we took half off, locked a little bit in, took another piece off. I'm going to add some more to this. Took more off. See, here's that bounce we wanted the whole time. So we got out. We ended up making everything right back. We're still slightly down on the day, but let me see what we're down. We lost about 50 bucks. We ended up making about 40. So we're down like less than $20. The bounce was there though. The bounce was there. I'm going to buy into this dip too and see if we get another rebound back up. I know I'm taking like a risky position here, but I like the edge. There we go. Come on. All right, we took half off and we got out completely flat. All right, we took another half off. We might add a little bit more to this. Kind of flat on the day now, but very close to. All right, we took another half off. There we go. All right, we are now green on the day, so we made all our money back. I caught the bounce. I was just a little bit early on the first one. Just a little bit early on the first one. We are now green on the day. I'll take it. You can see the green at the top. I had a feeling we would bounce, but production inflows. I think that worked for you last week, John. Yeah, pre-market, we did really well last week. We really did. And again, just to show you guys, like, these are my stats from last week. Like, just to give you guys, like, this is my stats since March 3rd. So this is basically like last week. Honestly, we did pretty good too. Like, if we look at these results here, and again, I'm not even claiming to be a good trader. Like, I don't guarantee freaking anything. Like, top 3 worst trader of all time. We made about $1,500, about $1,400 in the last week or so. Trade win percentage was about 68, 69%. Our average win was bigger than our average loss. $34 versus $22 average loss. Profit factor was 3.4 to 1. Day, we made money about 67% of the time in days, and our accuracy was just under 70%. So you love to see it. Pretty good results here, chat. Pretty good results. Let's see if we can keep it up. And some of this was pre-market trading. Some of it was pre-market, so we did trade in pre-market on some of these. Said Apple, Taiwan Semiconductors making investments. Is there any validity in buying Tesla where it's at now? What do you guys think? Is it time to buy Tesla? I'm not telling you to buy it. Don't get me wrong. I'm certainly not telling anybody to buy anything. So I'm certainly not telling you to buy it. But I'm curious about it because it's down so much. And it's one of the biggest companies in the world. And the Tesla, just to put this into perspective, guys, is down almost 50% right now. Almost 50% in 3 months, 2 months. Is it time to buy it up? I mean, I'm thinking about it, to be honest. I'm thinking about it. I'm not saying you should, but let's see. No. Leave Tesla alone. No. Yes. Not yes. Not yet. Yep. I wouldn't. Never. Tesla. Never. Negative. Absolutely not. Elon is cooked. Robotaxis are coming. It has a long way to go down. Hundreds before Friday. From a tech point of view, yes. I like the negative sentiment here. For a long term, it's good. I'm down pretty good on a short term. Tesla is surrounded by drama. No one is buying their cars. All depends on your current Tesla position. No. Yeah, I mean, I get it. Honestly, I get it. I think, to be honest, I think if Tesla had a new CEO, they'd do much better. Again, the problem with Tesla is very clear, I think. The problem is that Tesla CEO has okay, the people that generally buy EV are super tech friendly, and usually those people are not on his political side. And so he has ostracized a large percentage of Tesla's consumer base, and the people that do support Tesla are usually like big oil, right? Like they're usually big oil. And so that's a problem, for them in terms of purchasing. Now, Tesla's kind of a tech company anyway, but that's why they're down 50%. Whether they bow back, I don't know. We'll have to wait and see. I'm not being political either. I really don't know. I think this one's up in the air. I think it's an interesting thing to talk about. Yeah, I remember it happened to Meta too, and I thought Meta was sketchy at $90 a share. Meta's now at 600. It hit 700s at some point. All right, so here's the big level I was looking at here that I wanted to long into. I mean, I'm not being political. I'm just talking about Tesla. Whether you think it's good or not to buy down here. It's down 50% in 3 months, 2 months. So, yeah, great company, too much drama, though. Yeah, no, I agree 100%. And again, I'm not political. I don't care about either side of the political sides. I really don't care about any of that stuff. I just look at it in terms of risk. And I think a CEO super outspoken politically is risky. Regardless of how you feel, regardless of whether you agree with him politically or not, which I'm certainly not saying I do, right? But regardless of whether you agree with him politically or not, the overarching point is a super outspoken political guy as the CEO is a risky thing if you're selling things to people, so that's risky. All right, so we are rebounding back up. Part of me wants to short with a little baby position here. You know what? I'll try. Just one contract. One little guy here. We'll see if we rejected my level up top. We might add one to it too if I'm feeling spicy. Risk level up here at about 9/10s. Maybe I should have added. Little baby trade here. I'm gonna add some to this here. There we go. Took half off. You love to see it. I'll get out the rest right there. Just a little baby scalp. I'll take it. Little small gains. It's pre-market. I'm trying not to like destroy my account this morning. Are you apolitical, or do you just choose to keep a neutral stance when trading and streaming? Both. Like, I am very neutral politically. In real life, I'm neutral. Again, if I said how I really felt, both sides would hate me. I'm very neutral politically. I don't like any of that stuff. And I think the more you get wrapped up in it, never mind. Yeah, I think you have to change your trade style regularly. Sam said from a practical perspective, I changed my trade style. I think you have to, right? It's one of the reasons I'm so critical on gurus that are selling courses on stuff that's old, right? Like, bro, you might have made a bunch of money in the early 2000s, in the mid 2000s, in the late 2000s. It doesn't mean you can make money today. The market dynamics are wildly different now than they were back then. And so selling a course on you making a bunch of money in 2010 means nothing today. The strategies, patterns, market dynamics are wildly different than how they were back then, you know? And so then it's just marketing. People, they're just seeing if you're dumb enough to buy it at this point in time, if they're selling courses on that stuff. Like, the market dynamics are wildly different now. You got to stay up to date with it. You got to get into like a flow state of markets where you watch it regularly, you see how it's behaving currently, and you attack it like that. But you got a bunch of gurus slanging courses on publicly available content or on results they got in 2010, you know, and it's just nonsense. It's nonsense. What you really realize is this, okay? This is what some of the gurus, it goes just like this, right? They talk about millionaire students, and the people that are claiming to use their courses and that they're finding all this success, the millionaire students, they understand the game, which is that they pretend to be successful on this guy's content. This guy, in turn, gives them free promotion. You know, he gives them free promotion. So he promotes them. Oh, look at this millionaire trader. Look at this millionaire trader. So they both kind of pat each other on the back. They're all full of crap. And they're all pretending to be this rich millionaire, you know, penny stock trader. And it's all nonsense. It really is. It's all nonsense. They're just kind of patting each other on the back, trying to make each other look good so that they can get free promotion from each other. It's something that you see on YouTube a lot, actually. And again, with all that said, I'm here to say, you can support me as much as you want. I ain't giving you free promotion, you know. All right, Uber and a Model 3. Hey, good luck, bro. Yeah, sorry, Falco. I'm sorry, dude. All right, chat. Hey, we got 30 minutes, about 40 minutes left until the market open now. Look at this level, though, right here, guys. Man, listen, I'm not going to say this is the top 3 greatest level of all time, but look at that thing go, man. I should have held my short. Kind of mad about it. Look at that level. It hurts. Honestly, my long reward target was right here, and then my short resistance level was right there. Look at that breakdown. I'm green on the day. I can't complain too much, but still. Top 3 maddest trader of all time. Yes, I am trading micros. I'm the top 3 wimpiest trader of all time ever in the world. I don't even claim to be a good day trader. If anything, we're covering mostly an economic reports channel, and we cover broad markets and finance news and economics. We trade some as well, but we're the top 3 biggest, wimpiest trader of all time ever in the world. Definitely top 3. We'll size up a little bit after the opening bell, but for now, some of my rules are I try not to trade in pre-market because, again, I'm top 3 worst pre-market trader out there. I played paintball yesterday. It was a lot of fun. A lot of fun. I'm stung up though right now, but a lot of fun. Yeah, I mean, you could buy 1 or 2 micros and make 20, 30, 40, 50 bucks a trade, right? You get 4 of those a day, that's $200 roughly. That's not a bad size. Everybody wants to take these big gains and look cool on the internet, but I'm more wimpy than that. Yeah, all my wife went, my kids went. It was fun, man. It was fun. Honestly, I used to play back in the day too. Like, I used to play when I was younger. Not like professionally or even like semi-seriously, but I used to play. I had some guns. It was a lot of fun. NASDAQ pre-market. Yeah, so again, let's talk about the news today, chat. Let's talk about it. So, again, NASDAQ down, S&P down, Dow Jones is down. Today, investors are waiting on this week's inflation reports. We got CPI inflation Wednesday, March 12th, going live. We're going to stream it live here at 8:30. Be ready. We're going to cover it live as we always do. We got PPI inflation on Thursday. Michigan inflation expectations, consumer sentiment on Friday. Again, the president's recent implementation of tariffs is still heightening investor concern here, guys. People are worried about inflation and economic slowdown. I know, again, if we get high inflation this week, we're going to hear a lot of people talk about stagflation, which is a mix of high inflation and economic weakness, right? So if we get high inflation on Wednesday, everybody's going to be yelling stagflation almost 100%. Likelihood if inflation comes in high, we're going to hear stagflation. Bond yields have been decreasing, which is a lower interest rate sentiment, which means economic weakness is basically what it means. Bond yields go down as lower interest rate sentiment rises because of economic weakness usually. If the economy is weak, the Fed and everybody's more likely to push for lower rates because the economy is weak and we need to save it from a weak economy by lowering interest rates. But again, in that context, this week's inflation CPI report is big. Because the only way the Fed's going to cut rates is if inflation is under control. What stagflation is a precursor to is recessions. So stagflation happens ahead of recessions a lot of the time. So that's why that context is important. And yeah, we'll see what we get, guys. We'll see what we get. All right, guys. So, yeah, we got the SPY down, NASDAQ down. Bond yields are down. Wait, did we have another one coming out? Yeah. All right, so again, market ended up bouncing back short term. Let's talk about the CPI report. So this week's CPI report on March 12th is a key inflation gauge for markets and the Fed. Analysts expect a 0.4% month-over-month increase and 3.1% year-over-year. A hotter than expected print could delay rate cuts, impacting stocks, bonds, and the dollar. And so that's big this week. All right, so we did do our post that we do every single day on x.com. If you want to help support the channel, hit the heart button for good luck on this post. Give me a follow on X. We do this post daily. If you want a breakdown of it, there's the link right there. Great way to help support your boy here in this channel. There's the link. We are going to be day trading live in about 30 minutes after the opening bell. We're already up a little bit. All right, guys. All right, so we are starting to flush and break down here. All right, we are starting to pop back up. Hi, I want to ask everyone a question. For the current market condition, is it profitable for someone relatively new to try Topstep on futures trading? Is it profitable? No, you're probably going to lose. Most day traders lose. It doesn't matter whether they're on Topstep or not. Most day traders are going to lose, right? The question you have to ask yourself, is it cheaper to learn on something like Topstep than depositing the amount of money you need to trade freely into a regular account? And that answer is probably true. You're still probably going to lose because most day traders lose. It doesn't matter what course they take, who they follow, what the market conditions are. Almost all day traders lose money. And it takes years to be successful. And most of the time you lose money those entire few years when you're learning. And so that is why Topstep is valuable, because it gives you a cheaper place to learn. You still learn to trade under pressure. You still, have some pressure. It's not just a regular demo account. You're still risking something, but you're risking usually noticeably less than $1,000, than the thousands of dollars you need to put into a regular account to day trade. And so, yeah, I mean, you're still probably going to lose. Is it profitable? Probably not. Most day traders lose. With that said, if anybody wants to check out Topstep, again, remember, most day traders lose. It's kind of like a souped up demo account, but I would much rather lose $50 and learn how to trade and have a great resource and community of traders there than put 10 grand into a stock account and try to day trade that and probably lose all of it or more. And so again, if you want to check it out, there's a link. I'm an affiliate of them, though. I get paid by them, so I'm biased, but I genuinely think it's useful for day traders that want to learn instead of funding their own account. Yeah, I mean, I'm not sure what you mean, Beth. Most day traders lose. 90% of day traders lose. Almost all day traders are going to lose. And so, knowing most day traders lose, I wouldn't go into it expecting to be profitable. I would go into it expecting to lose, because that's what day traders do. But I would look at it kind of like a demo account, like you're paying for a demo account, right? You get a 50K demo. If you make 3K without losing 2K, great, you can get funded. If you fail it, it's a learning experience. That's the way you have to look at it. You'll probably lose. Let's be honest here. You'll probably lose, and that's okay, right? But you don't want to look at it like, again, I'll put it this way. The traders that have the most unrealistic expectations lose the most because they think they're going to be some savant and grow, and, like almost all of them are going to lose. That's normal, right? That's almost everybody. Well, I don't think the bull market or bear market, you can short, you can go long in day trading. It doesn't really matter, bull or bear market. This is day trading. So whether the market goes up or down, day traders still make money or lose money, right? But I would say the edge in day trading is a little bit higher now versus bull markets. But it doesn't matter. Everybody's different, I would just get into it with reasonable expectations and understand most day traders are going to lose. Yeah, just don't quit your job, Are you really, Lolo? I'm sorry. All right, guys, we got less than 30 minutes. Less than 30 minutes. But what if I need Topstep to have a stable monthly income? I mean, then I think you're looking at it in the worst way you can. Nothing's going to be stable about day trading. Nothing. And so I would get a job, to be honest, and be okay with losing whatever you spend on anything in trading. Most day traders lose. If you get into it, okay, I'll put it this way. You get a lot of people that are like, hey, I want to quit my job and become a trader. Do not quit your job. Do not think that you're going to somehow support yourself through trading in the beginning, because the likelihood that you're going to do that is so freaking low. So freaking low. And gurus put out these marketing material where they act like you can just buy their course and be some type of rich trader. Total nonsense most of the time. Almost all day traders lose. The ones that do make money, it takes them years to learn how to do it. And they lose money throughout those years, they lose money. But once you learn, it's a skill you can have for the rest of your life. But most day traders lose, right? No matter what, most day traders lose. Hello? All right, sorry guys. My mother-in-law's dog is sick, and so I'm trying to deal with it. We did make money on that short though, so we did make some money on that short. We got 25 minutes left until the market opens. All right, guys. I'm sorry, guys. I kind of got to get on to my kids. I'm on the phone with them. You know. All right. Anyways, yeah. So we're popping up a little bit. I'm gonna short this again too. Here, hold on. Let's see if we get some. So we made some money on that last trade. Let's see if we can catch a little bit more here. There we go. There we go. Look at that. Out. All right. Cool, man. Hey. So this is maybe I should start trading in pre-market more. We're up almost $100. I'll take it. Look at that rejection here. We caught that rejection right at my resistance level too. The trades have been going okay. Yeah, I mean, honestly, if y'all heard me, it wouldn't matter because I'm just kind of like I'm kind of like telling my kids, hey, y'all need to do better. You know. Yeah. All right, guys. Yeah, sorry. A little family thing going on. Look at these trades, though. I mean, we're trading in pre-market. We only lost 50 cents today. Look at this. 50 cents. We lost $30 earlier, but in our last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 trades. 50 cents. Not too shabby there. I'll take it. I would short back into this too, but I think it's almost too easy. It does kind of look like a head and shoulders. Look at this pop. Whoa. Whoa. Some type of economic report happened just now. Some type of news release just happened. Look at that candlestick. What is this? Something happened. What is going on right now, guys? Look at this. Glad I didn't short that. Anything, what caused this candlestick? Look at this move here. Big money, definitely. Usually this is some type of economic catalyst of some sort here. So like usually this is some type of economic catalyst. Who knows, but Yeah, so this is some type of weird economic catalyst. I have no idea what it is, but all right, guys. So again, we're gonna be day trading the NQ. Okay. So the president might meet with the Chinese prime minister sometime soon, or Chinese president as soon as April, is what they're saying. I don't know if that's causing the move though. I would short this again, but I think I'm a little late now. Yeah, that was a big move. No, it's, yeah. I mean, when you trade, there's always somebody on the other end of the trade. So if I'm buying, somebody's selling. If I'm selling, somebody's buying. That's how it goes. You know, there's always a winner and a loser on every trade. He might speak today. I don't know. Okay, we got 15 minutes. We're gonna day trade live. Yeah, we got 15 minutes, guys. I don't know what to do here. Tesla's still down here, man. We'll see if markets start to bounce back. We're kind of choppy. You know, the only thing that we have today is CPI this week. So we have CPI inflation data dropping Wednesday. Biggest day of the week by far. Next week we have the Fed meeting. Sometimes ahead of this big reports, we get choppiness. We get like range-bound movement in futures and stocks because of choppiness, right? So sometimes ahead of these reports, we get choppiness, neutral activity. We'll see what we get. It's very possible that because we have CPI this week, today especially, like we have the JOLTS report tomorrow, so we might actually get more choppiness tomorrow too. But we could have choppiness today is what I'm saying. And so far, that's kind of what we've seen in the last couple hours. We've seen downward pressure, downward, up, down, up. So we're kind of getting like a rectangular range here. We'll see what things look like, but that's what we're seeing right now. Sorry, guys. I'm trying to deal with my kids, like, getting into this big fight. I'm here. I'm sorry. I'm trading, so you can watch me trade still. I think we came out a little bit down on that last group of trades, but I think we were correct about the direction. We just kind of missed out on it. We only got 10 minutes left until the opening bell. 10 minutes left. And so... Hey guys, so I'm here. I'll be off the phone in just a second, guys, okay? Market's still flushing down. I kind of want to short it right here. We got 8 minutes until the opening bell, guys. 8 minutes. Drama with kids, man. Drama with kids. It's never a dull day. Anyways, we're under this level at 19.8 thousand. Yeah, market opens up in 7 minutes, really. About 7 minutes. Yeah, let's have a good day. We'll try. All right, we got 6.5 minutes left. 6.5 minutes. Market's very choppy, very flat. Again, this is CPI inflation week. So, because we had daylight savings time. So daylight savings time, the clocks, we lost an hour. So it would be 8:30 market time right now. It is now almost 9:30. So we lost an hour to daylight savings time Sunday morning at 2 a.m. is when it flipped back. So we lost an hour. We jumped forward an hour. Spring forward, fall back. Yeah, so in spring we always jump forward an hour. Yeah, I'm not. Yeah, Taker, I'll try, brother. I'll try, man. But yeah, I don't really like losing an hour either. Plus, I stayed up all, that night and watched UFC Pereira versus Ankalaev. Honestly, Ankalaev won. People acting like Pereira won. Ankalaev obviously won. You know. Pereira did not look good. He barely threw anything. I'm not sure why. Like, Pereira seemed to, I don't know if he broke his hand or something, but Pereira barely threw anything. I don't know what he was doing. Yeah, so again, AVGO popping up. Meta at 610s. Oh, that spinning kick KO. I was kind of pissed about it, though, Richard, because ESPN was down for me. So I was trying to buy the fights, and I couldn't. And so I missed that one, like the one fight that had that crazy spinning kick on it. I missed it. I was able to watch the replay once I bought it. I had to go through Hulu to buy it, but I was still kind of mad. All right, market's still breaking down, still in this choppy range. We got 4 minutes left until the opening bell, guys. 4 minutes left. Yeah, I mean, it doesn't matter how many takedowns. Pereira barely threw any strikes, except for a leg kick. He didn't throw anything else. He didn't punch at all. So regardless of the failed takedowns by Ankalaev, Pereira didn't throw anything. He just kind of sat there circling and didn't throw anything, man. And so I thought Ankalaev won, even though I wanted Pereira to win, to be honest. But Ankalaev actually was throwing strikes. Pereira was just kind of sitting there. I'm not sure if they do a practice account on Topstep prior to paying for it, but I know if you pay for Topstep, you get a practice account that comes with it, but beforehand, I don't think so. I'm not 100% sure, though, but I don't think so. And again, if you haven't already, guys, I'll put the link for Topstep up. It's a great way to help support the channel. Again, they're an affiliate of mine. I am biased because of them, but if you want to check it out, here's the link. Great way to help support your boy here in this channel. And that's what I was also saying, like John Jones wanting to fight Pereira. Like, look at Ankalaev, right? Like, Ankalaev, you know, if Ankalaev can beat Pereira, Jones would just have a walk him down. It would just be easy. Yeah, I would love to do a power, and I would love if Powell spoke daily. My views would be on fire, but unfortunately, he doesn't. Broadcom's starting to bounce back a little bit. We'll see if we break up or down now. All right, we got the opening bell in 2 minutes, chat. 2 minutes. Ankalaev ain't gonna beat Jones. Although it would be a good fight. I think it would be close. Closer than a lot of people would expect. But I still think Jones would probably win. Jones' wrestling is going to beat Ankalaev's, to be honest. I hope they do Aspinall versus Jones. All right, guys, we got 1 minute left. 1 minute. All right, so we're still down here. We got 30 seconds left, guys. 30 seconds. Let's do this. Yeah, I mean, I don't know, rational. I'm not going to really get into controversial stuff like that. I'm good on that conversation. All right, guys, so Nvidia popping back up. We got to watch Nvidia. We got the VIX up on the top right as well. Here we go. Here's the opening bell in 10 seconds. I'm trading futures. 5, 4, 3, 2, 1, and... Right, so we are flushing down a little bit here. Look at this breakdown here. So we are breaking down some at the opening bell. Although Broadcom is pushing up. I'm looking at like Netflix dropping. Meta's down. I gotta put it like Apple. Apple's down a little bit, although it's just a little chop. I'm worried we get choppiness today too, man. I really am. All right, Apple at 235. Again, I'm going to wait 5 minutes until the opening bell to take any trades. Apple at 234s. All right, we're at 234s. We're breaking down. SPY's pushing up. AB Broadcom's pushing up. Tesla's starting to break down. Netflix starting to break down. Meta's starting to bounce up a little bit, but Apple is falling quickly here. So I kind of want to short this, but I need to wait at least a couple minutes first because Apple's falling down. I'm going to wait, though. I do kind of want to short this, but I'll put Apple up on the top right. Look at Apple fall down to 233s. Yeah, look at this breakdown in both of these. Look, I should have shorted it too, man. It's just a little too close to the opening bell, but look at Apple fall here on the top right. See, this is what I wanted to short this. Yeah, I don't want anybody to copy my trades at all. I'm not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. Do not copy me. I have no freaking idea what I'm talking about. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Don't copy me. No idea what I'm talking about. Understand, I genuinely don't even claim to be a good trader, and I really do not want people to copy me. Do not copy me. If you copy me, you'll lose, most likely. Don't do it. I should have shorted here, though. That looked like it worked, but... All right, look at this red brutal action coming through here. All right, so we are breaking down some here. Still falling. Still looking weak. Apple's turning. I should have shorted. Short looked good there. We're about 4 minutes into the opening bell here, chat. Look at these drops. Look at Nvidia turn now, too. A lot of stuff's turning red. Yeah, I'm sitting tight here. I'm going to try to buy this now. It's a little risky catching a falling knife, but I'll add some to it if we get like a good bounce. There we go. Add a little bit to this. All right, took half off there, took the rest off there. So we just made about $40, give or take about 40 bucks. We're up about 100 on the day. Slow but steady here. Chat, slow but steady. Big rebound back up here, chat. Monstrous rebound back up. Huge rip. All right, guys. So big volatility at the opening bell. I'm going to short this. All right, we just made another $26. We're now up about 105 on the day, about 105 bucks. I think we're rejecting right here. And so I'm using levels that I haven't documented on the chart yet, just to clarify here, guys. Look at this flush breakdown here. I'm also using momentum. I'm watching Apple. I'm watching Nvidia. I'm watching a lot of the blue chip tech stocks to see what they do. But again, I'm not even claiming to be a good trader. I mean, not an investment professional. Tesla's still falling down, looking weak here too. Man. Red momentum coming through. Look at Apple breakdown. Nvidia's still weak. Look at Apple. Apple's one of the most heavily weighted stocks, so that's one of the stocks we're watching. All right, Tesla at 247s, Netflix at 865s, Tesla at 240s, Meta at 606, Broadcom's flat. Nvidia's trying to creep back up, though. My hands are kind of off. I did lose one of my funded accounts, but this is one of the funded accounts. Like, I have 4 of them right now. One of them's been deeply red, and so I took a swing just now and lost it, and that's okay. The other few, one of them I'm flat, I haven't traded on. The other 2 I'm green, I'm nicely green on. So I had to take a risk for that one and ended up losing it, and that's all right. Just for transparency purposes. The other 2 I'm green on, but I was deep red in that one already, and so that's kind of how it goes. Tesla down. Yeah, Tesla is down. Tesla down to 240s. Looking nasty down there, man. Looks really weak. Market's starting to pop back up, though. I think the market really likes this 857 line. Look at that. So we went right up to that spot. 855, 854, 857 level. We're right up to it. Tapped it and came back down. Again, I do see choppiness right now in markets, so I think the market could be apprehensive leading into inflation data on Wednesday. They might be nervous about that. Yeah, I mean, I'd rather just be real with people. Like, again, you got a lot of people that try to criticize me, that talk about me being bad as a day trader, and none of it matters. Like, they're just grasping at straws trying to find something to attack. I don't even claim to be a good trader. I just tell people, hey, top 3 worst trader ever. And, like, if I could outperform that expectation, I'm happy, you know. But, like, in the end, most of the guys on YouTube acting like they're the greatest ever, full of crap anyway. I would rather just tell people, hey, not an investment professional, you know. Don't copy me. I have no idea what I'm talking about. Don't try to piggyback off my trades. Don't do any of that stuff, and I don't sell a course or sell a service or even claim to be good. So I'd rather have that and sleep good at night and just kind of cover economics, which is what I'm usually good at: economics, swing trading, investing, and then day trade as well, but without setting any expectation for it. I don't know. My CPI prediction I'm going to give on CPI day. I don't know what it is yet. I'm going to have to do some research and see what I like regarding CPI. But I'm going to wait for that one. Facts. I don't know how those dudes have the balls to fake it. Yeah, I mean, I'm just a marketer, and but really I'm an economist. You know, I think if people pay attention to my economic streams, they understand what I'm good at, and they understand, like, what I'm good at is teaching economics, I think, and teaching people how to follow economics in broad markets and finance. You know, day trading, most people lose, and like, you can be great at it, and it can be a skill you have for the rest of your life. But most people lose, and I feel like I need to be honest with people about that, because it's true. That's why platforms like Topstep are useful, because if you take somebody that tries Topstep, loses, and then walks away, versus somebody that tries day trading, funding their own account, loses, and walks away, typically the latter is going to lose much more, right? And the same type of percentage is going to be successful. The person that learns through Topstep is generally going to lose less over time. And they're going to learn how to follow rules. They're going to be more better suited towards day trading versus somebody that funds their own account. The amount of emotion that comes with funding your own account and day trading is so far. It's so high. And again, if you want to check out Topstep, I'm biased, but I'll put the link up here. Great way to help support my channel. If you want to support movements like this in trading and economics, there's the link in Topstep right there. Great way to help support the channel. But yeah, I'd rather just be real about it. You know. That makes more sense to me than like setting some unreasonable expectation for my skill of day trading. And then if I fail, I feel like I need to lie and embellish things. And if I exaggerate my wins and pretend like my losses aren't there and cherry pick my wins, I'd rather just be real about it. I appreciate it, X. I've seen you have green days and red days, but every stream you do exactly what you say you're here for, and that's to provide economic data, and you always explain your biases. Yeah, I appreciate it. We try. No, I make much more money marketing than I do day trading. Much more money marketing than I do day trading. Most people on YouTube most day traders on YouTube do not live off of their day trading profits. Most of them are marketers, and that's okay. Like, I'm not here out of the kindness of my heart. Nobody is. I'm here to make money, of course. I'm not spending 3-4 hours a day on here out of the kindness of my heart. That's silly. You shouldn't expect that from anybody, and anybody that's telling you they are is mostly lying to you anyway. This is a business. I mean, I think most people can't live off of day trading, regardless of where they go. Yeah, I think most people can't live off of day trading, regardless of where they go. It doesn't matter, where they go. Hey, congrats, Kevin. Congrats, brother. That's great, man. Top 3 economists in the world. Yeah, we try. My levels kind of work too. Like, I'm not going to say they always work, but like, look, we definitely respected this level here that I had on the chart since way back here. And now we're pulling back to it and kind of bouncing off of it. So the levels that I use tend to be pretty decent. I'm not saying they're the greatest levels of all time, but I would say they could be in the top 3 of levels ever in the world. And this is obviously sarcastic. All right, so we're still heading up here. Let's watch Apple. I think Apple's going to have a lot to do with it. Mostly the reason the market's going up is Nvidia right now. Nvidia's pushing up. That's dragging the market up, but Apple's still really weak, really red. Definitely top 5-ish levelers in the world right now. Yeah, but we're not in a recession, In fact, GDP is still 2.3%. Unemployment still under 4.5%. Payrolls are still over 150K. So it's not recession conditions. And I know we just left an election year where people are pushing this big economic weakness thesis because they want their guy to get elected, or they wanted their guy to get elected. So they're saying, oh, look how it's the worst it's ever been. pretty ironic that every election year it's the worst it's ever been, regardless of which side says it. You know, look at this level up here too. So we did tap this level right now as well. All right, so we did tap that level. I see Broadcom starting to come down. It really depends on which one starts to bounce first, I think. Here we got Apple trending down, Nvidia trending up. So whichever one starts to turn first is going to influence which way the market goes. If Apple starts to rebound back, the market's going to keep pushing up most likely. If Nvidia starts to turn downside, the market's going to start breaking down here. So it really depends on which one goes first, if that makes sense. These are two of the heavily weighted, most influential stocks in finance. And so they're going to guide what's happening here. And Nvidia still pushes up, so it's up to 112s. AMC. Where's AMC at? I didn't even cover AMC's earnings. Where's GameStop? GameStop's still looking pretty weak too. All right, so Apple still keeps flushing down here. All right, so here we're breaking down here. All right, Broadcom flushing down here. The NASDAQ finally broke under this big resistance level. I'm going to short this little pop. Let's see if we flush down a little bit more and then maybe add to it if we get something. This is taking a little bit too long, to be honest here. There we go. All right, we're going to cut that there. Just made another $35, $40 gain. Catching that breakdown. Yeah, I mean, GameStop's on its way out unless they do something to change it. Physical copies of video games are done. You know, nobody uses them. Like, and it's weird. It's like, if I say this, you can tell how like manipulated people are for GameStop, right? And I'm supportive of GameStop. I hope GameStop succeeds, but you can tell people are just highly biased because it's very clear, like, physical copies of video games are over with. And every time I say this, you got somebody like, nah, bro, I like physical copies of video games. That might be true, but in general, physical copies of video games are over. Like, in terms of percentages, the people that use physical copies is way, way, way down. I haven't bought a physical copy of a video game in a decade. And so it's on its way out. And that means GameStop is as well. Right now, you can always buy stuff online and buy controllers and stuff like that. And so I still think there's going to be some GameStops. But I think stores are going to close, of course, because that's the natural outcome of dwindling physical video game dynamics. And I think it's very clear that's going to happen. You know, now maybe GameStop can hold on and they can get involved in collectibles and stuff like that. But even if you opened up a collectible store, you can't open up one every 5 miles. You know, like stores are gonna fail. Doesn't mean GameStop itself is gonna fail. But this is just the natural cycle of business, I think. Well, the only physical copies of video games are retro, Matt. Outside of that, it's all done. They've been needed to they've been needed to shift, and for whatever reason they just haven't. I'm probably going to get out of here a little bit early today, guys. We're green. We're up a really nice amount. We've had really good trading on this main account that we've been trading on today. Here's the P&L right now. Pretty good results. We sized up a little bit towards the end, but we're up pretty decent here. And again, if you want to try Topstep, Topstep is a great way to learn day trading. Most day traders lose. Again, it doesn't matter what course you take, who you follow, who your guru is. You're not going to be some savant day trading guru genius. You're just not. Most day traders lose, in fact. And so you can either fund your own account, thousands of dollars, and learn how to day trade that way and lose thousands most likely, or you can try Topstep. Topstep gives you a 50K demo. It's kind of like a souped up demo account. If you can make 3K in profit on that 50K demo without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split, and they've paid out millions, almost 200 million. They fund thousands of traders. They pay out millions in actual withdrawals. And if you fail, you're out $49 for the base one. It's not the end of the world. It's the best of both worlds. It's limited risk. If you fail it, you get a practice account with real-time data anyway, which is if you were going to pay for that independent of Topstep, it would cost somewhere in that ballpark anyway. If you pass it, you get a 50K funded account. You get to keep your first 10K in profit and 90% split afterwards. That's very similar to funding your own account. Risk is noticeably less. They've paid out almost 200 million. Day trading futures is very similar to day trading stocks. No PDT rule. You can day trade the S&P, the NASDAQ, basically the SPY and Q price action, gold. Very useful for day traders. Very useful. In fact, I think this helps you learn over everything else in a more profound way. But I'm biased because I get paid by them. They're an affiliate of mine. Top 3 most biased person in the world right now. But if you want to check them out, here's the link. Great way to help support your channel. Understand all these rules right here, guys. Understand all this stuff on screen. I have no freaking idea what I'm talking about. Don't copy me. We will be back tomorrow bright and early. We got the JOLTS job report coming through tomorrow at 10 a.m. We're going to stream that live. The day after that, we got CPI inflation, PPI inflation afterwards. Y'all be ready. It's a big day. It's a big time. I'll see you guys later. I love you all. Y'all be careful today. Tomorrow, big day. Wednesday, huge day. I'll see you guys later.